One good thing about volatile stock markets is it can make an excellent time to find bargains. Here to talk about that with me is David Herro of Herro Associates. Hi, David.
Thank you.
You mentioned three stocks that you think are particularly attractive right now, and I want to start with Baidu. This is China's big search firm. You talked about a dominant market share and that the moat for the business is actually growing. What do you like here about Baidu?
Well, the volatility that you discuss really provided an opportunity for us. And when you have price moving up around a lot faster than value, that spells opportunity. And this is what's happened. Baidu is a Chinese-based stock. Since August, when we had that devaluation statement made by the Chinese central bank, the market got extremely disrupted. Now, we think Baidu has a very good business. So in search, the more and more data, the more and more users means you could be better and better at what you do. And Baidu being the largest, and remember Google left because of they would not go along with the censorship rules. Baidu was kind of left to be there by themselves, have the market by themselves.
A lot of times in China there are some issues with state control of these businesses and some different factors. And here you mentioned that this is a quality business that meets all of the characteristics you're looking for, and good governance, reliable numbers, and it's been caught up in some of the selling.
That's exactly right. So unlike some of the Chinese H shares, there's no government ownership. Yes, they face a government regulator, but there's no government owner really doing a push and pull between the other shareholders. It's owned by the people who develop the company and by outside shareholders.
I want to move on to Richemont, another one of your top picks right now. What do you like about them?
I mean, Richemont, which of course is the owner of the Cartier brand, is a beneficiary of what we believe is a secular change, a positive secular change of people in the EM going from lower class to middle class, to upper middle class to upper class.
It's a European company, but really also kind of a China investment.
That's right, and in EM, and it's exposed. People in the developed world certainly like luxury goods, but you get extra growth as your market is expanding because of this secular change. Now, it's taken a little hiccup, because things don't move in a straight line up. Some of these EM economies have slowed, but we think over the medium and long term, the exposure Richemont and Cartier and their other brands have to these consumers is very beneficial.
Has this been caught up in, I know in China there's been a backlash against gifting by government officials, this sort of thing. It's affected some of the luxury brands. Has that affected Richemont?
A little bit. More the alcohol producers, cognac and champagne in particular, a little bit. What's really hurt them in China itself and in Hong Kong is the currency devaluation of the euro. So it's now a lot cheaper for Chinese people to buy stuff in Europe because of the currency difference.
Make the trip, buy it there, yes. Bring it home.
And you see it in the numbers. They could see it in credit card swipes. You see that their business with the Chinese consumer in Europe is up quite dramatically.
You see very strong numbers in Europe, and it's because of travel.
And very slow in Hong Kong and Macau.
Okay, moving to Credit Suisse, another one of your favorites. What do you like about Credit Suisse right now?
Well, Credit Suisse, of course, has a private bank wealth management arm, as well as the investment bank. And there's been all kinds of questions surrounding capital and the strength of the earning stream, consistency of the earning stream coming from the investment bank, which we believe, especially with new management, focusing on better capital allocation. Old management did a very good job at maintaining the strength of that financial institution. A new manager came in, a new CEO came in, Mr. Tiam came in June, and I think the focus is going to be, when we're looking at capital allocation, a lot of money is earned in both the investment bank and private bank. Let's really make sure we allocate it based on risk return of the various businesses. And I think Credit Suisse going forward, it's going to have a stronger capital position, and B, is going to have a much more stable and decently growing cash flow stream, all at a very low price.
And that increased stability, I suppose investors would be willing to pay a higher price for that.
I think what you're going to see with that stability is a higher price. Right now it trades at a huge discount to its crosstown rival UBS, and then you can make an argument it should trade at a premium.
Okay, David, thanks a lot for talking about these picks with us.
Thank you.